Many people are concerned because the stock market's been so volatile and many people have lost money in the market. So what is one of the solutions? Well, I have a chapter in my book that's called Insure Your Investments. You know, here's a funny thing I found about people in the stock market. They love to be in the market when the market's going up. They just don't like being in the market when the market's going down. Well, is there a place where you can get all or much of the upside of the market, but you don't have to participate in the downside? And the answer is yes. That's what variable annuities do. And some of the benefits of a variable annuity, you have an extensive choice of professionally managed portfolios. You can move your money around, and when you move the money around, there's no taxable event. The only time there's a taxable event is when you take it out, so it continues to grow tax deferred, and you do have access to money within the contract that allows sometimes 10% window, some allow 20%, some allow gain windows. You got to look at the contract to see how you can access your money. I will say that for annuities prior to age 59 and a half, there is normally a 10% federal penalty for accessing the money prior to age 59 and a half. Now, if you need to get money out prior to age 59 and a half, you can follow the IRS rule of 72T, which is substantially equal withdrawals, and there are 3 methods that you can get money out prior to 59 and a half without a 10% federal penalty. But some of the benefits, again, of variable annuities, you have a guaranteed death benefit. You put in $100,000, market crashes to $50,000, you die, your family gets the $100,000. You can turn it into income for life. There's some other features that can be built in, things like dollar cost averaging, automatic asset relocation, which is a rebalancing thing. Some companies have a thing where you can take your interest and put it into the market, but keep your money in a guaranteed fixed account. So variable annuities have many of them have living benefits now. There are 3 forms of living benefits. There's a guaranteed income benefit rider, there's a guaranteed withdrawal benefit rider, and a guaranteed minimum accumulation benefit rider, and I'll talk about all of those in another section as well. But these are the living benefits while you're alive, so that even if the market crashes, that you don't have to experience all of that pain, that you've got guarantees that are protecting you. Normally, you have a multitude of funds you can invest in. You know, you can invest in stock funds, small cap, mid cap, large cap, growth, value, international, emerging markets. You can be in commodities, you can be in bonds, corporate bonds, government bonds, high yield bonds, convertible bonds, all the different types of investments that you could make outside of an annuity. There's almost certainly some annuity somewhere where you can make those types of investments inside of a variable annuity as well. And some companies have proprietary funds, which is their named funds, and then they also have non-proprietary funds where you can get the Fidelities and the Morgan Stanleys and all the other different named funds, BlackRock and all those funds as well. So you're going to want to read the prospectus and read the contract to see what's available. The living benefits, again, provide guarantees that if the market goes down, that the client is protected. Now, if the market's going up, what are the benefits of a variable annuity? Well, you've got all the funds, that many of those funds would be going up. Some companies have riders that will pay the taxes, that if there's a gain in the contract, they'll pay the tax on the gain. So that's a benefit in an up market. Many variable annuities will reset the death benefit if the market's going up. Each year or each 2 years or each month, depending on the annuity contract, that death benefit is reset. So in an up market, that resets. And some living benefits reset in an up market as well. And so those would be the benefits in an up market. What about a down market? Well, you've got guarantees that you won't lose money and a guaranteed minimum accumulation benefit rider. You've got guaranteed minimum income levels in a guaranteed minimum income benefit rider. You've got guaranteed minimum withdrawal benefits in a guaranteed minimum withdrawal benefit rider. Many times you have a fixed account. Some of these variable annuities have a premium credit or a bonus when you put money in. And those are all things that would help protect you in a down market.